Interested in real estate? How about wealth? Well, they go hand in hand. And here, you'll learn all about it. Welcome to Be the Bank, a podcast where we discuss and debate the topics centered around real estate investing. Your host, Justin Bogard, shares insights into investing in real estate to create real wealth and passive income for you and your family. He'll share stories of real estate investments done right, walk you through the process of owning a real estate note, and most importantly, educate you so you can be the bank. This is Be the Bank, brought to you by BrightPath Notes. Now, here's your host, Justin Bogard.
Here we are, episode number 12. I'm going to have my friend again, Mr. Richard Thornton, on today. And, well, you might find this hard to believe, but there's actually quite a bit of work that you want to check up on. You want to cross your T's and dot your I's as it comes to the post-closing process, as I call it. It's where you buy a loan and then you start collecting on the payment. And there's a lot of things you got to do. And we're going to discuss on why you need to do things and how quickly you need to do them. So stay tuned. This episode is brought to you by BrightPath Notes. Hey, Richard, how are you today, man?
Pretty good, Justin. How about you?
I'm doing good. It's the afternoon. It's a little bit warmer today. And, yeah, man, can't complain. I get to talk to you and talk about notes.
That's fantastic. We're cooking in California here. It's 90 plus degrees. And for that, it's pretty warm in Northern California.
All right. You going to go do some surfing later?
Yeah, right.
Richard, your connection was breaking up quite a bit there, but I think I heard your comment to say, yeah, right, I'm not going to be surfing. So, yeah, right. I didn't think so. It's too dangerous. I won't allow you to do it because I won't give you time off work.
Okay.
For injuries. Richard, when I buy a loan and I get that loan, I feel like I've done a lot of work with the due diligence. I've gotten this deal at the price that I want. And then after I purchase it, I'm starting to get fed some documentation. I'm starting to get fed some information that I need to verify to make sure I got everything in my collateral file. I'm going through the process of recording all the typical things you do. You're boarding it with a servicer, and so what I find interesting is that a lot of note professionals either are very quick about this stuff, or they just kind of go at their own pace with it. The note business in general seems to be kind of island time, if you will. It's kind of at your own pace, and things don't move very quickly sometimes if you want them to. And I'm on the opposite mindset. I want to get this thing, boarded as quick as I can. I want to get things recorded and stuff. And so talk to me for a minute. What are some of the experiences you've had if you haven't been, is the correct word expeditious about getting these things done?
Well, yeah.
Or are you on island time with your post closing?
Yeah. If I'm on island time, the biggest problem is that things get forgotten.
Yes.
Yeah.
Yes.
So, did you file this? Did you file that? It's a real job keeping track of what you have or have not done. And as you know, we both use Podio to help us do that. But even with that, you have to set up a lot of tasks, a lot of reminders, because if you forget to record a given document, you can end up between a rock and a hard place in terms of what happens down the line. You get sued, you don't get sued. As you know, I've got a deal going right now where a land contract by a previous owner did not get recorded.
Uh-huh.
And one of my, even though I have sold the note, the borrower is trying to refinance right now and cannot do it because they can't get clear title. And so it's a mess. It's a mess.
Yeah. So your remedy to that is you're probably going to have to record the land contract and all the assignments that came with it, so the chain follows in proper order.
Yes, I'm going to have to go back and do that now, but I'm also going to have to pay a lawyer to help me do that.
Yeah.
Where if I had just done it before, it would have cost me $50 or whatever with the county to go ahead and have it done.
Yeah.
There's a lot of, as you know, a lot of our documents need to be notarized.
Yeah.
And so how do you get the borrowers to do that? I mean, it's like anything else. You have to keep people's attention focused on it to get it done immediately, because if you don't, it's probably not going to get done.
Yeah. When I first bought my first few loans, I didn't realize the importance of being very detailed and accurate with trying to set up a process after you buy it to make sure, because quite honestly, Richard, I just want to sit it and forget it. I want to get everything done with it and just start making money. And that's where I want to be. And oftentimes I would just not realize I need to do something. One of my biggest issues is insurance. So when I'm buying a loan, obviously you need to have insurance on it. If the borrower doesn't have insurance on it, then you need to put a forced place policy on it. And that's something that we need to advance where the borrower pays us back. And so I haven't been doing a good job when I first got in this business of making sure that endorsement clause or that mortgagee clause, whatever the insurance company calls it, is updated with my lender's vesting information, the proper information. So that way, if something happens, God forbid, if something happens, a fire or whatever, and it's a total loss in the house, at least I'm getting paid. The mortgage is getting paid off and I don't have to worry about it. But if that insurance policy isn't updated, you could be SOL. Luckily, we've had, unluckily for the borrower, their house burnt down, but luckily we were on the policy the correct way. And so we were able to get paid off in that situation. But if I wouldn't stayed on top of it, that money could have been out somewhere. I could have not seen it for 6, 7, 8 months, a year, just fighting it, trying to get it back. So,
right. So you brought up a very good point there, which is the insurance, but also you mentioned forced place insurance. Tell everybody what that is, because that's not a term that a lot of people are familiar with.
Right, it's a policy. So if you own a home, and if you decide you're not gonna repay your homeowner's insurance policy, it's gonna go lapse, it's gonna expire, and that lender should get notification immediately to say, hey, this insurance policy is expired and there's not one there. Then there's a trigger that someone, either the mortgage company or the servicing company, is going to go out and get a forced place policy, which is a lender's based policy, more expensive, just to put liability coverage on that house so that in the event of a catastrophic event, the lender is protected with an insurance policy to get the unpaid balance paid off.
And so you are forcing it to be on the property, correct?
Yeah, so it's just a homeowner's insurance policy, but it's lender based, and it's typically just liability only, casualty. So that way you're covering just the unpaid balance part, not really to rebuild the house, not really to prevent any lawsuits or anything.
And who pays for that?
So I think I heard what you said. Your connection's bad. So basically, we have a couple options here. We have the servicing company can provide that for you, and they could have triggers internally that do that. Or the servicing company may have that be a responsibility on the lender to go out and find that vendor and put that policy back on the home, and then give them the declaration page so that they can put it in their file so they know that, okay, this thing's covered.
Right. Who pays for that policy? The
lender's going to pay for it, and they're going to advance the money. So we can't really say the lender pays for it ultimately. The borrower owes it. They're required to pay it, but the lender may have to advance. They call it a corporate advance on that policy.
Okay. And how much is that policy for?
It depends. How much is the loan balance? What's the property worth? I mean, there's a lot of variables there that you can't answer, and the insurance companies will give you that information. So it could be a couple $100 for the year. It could be a couple $1,000 for the year.
No. I mean, I'm sorry. How much are you covering the house, or are you covering the mortgage? Which value are you covering?
The mortgage.
The mortgage, right. Okay. All right. Yeah, I just wanted to clarify that for the audience so that they understood.
Right. So that kind of dovetails me into servicers.
Right.
It's really important that you understand, Richard, the characteristics of that servicer, what they do and what they don't do, because each servicer is a little bit different, and you kind of have to adjust and adapt to that environment. So I've learned that I deal with two servicers mainly right now, and they're kind of, I wouldn't say they're polar opposites, but they're opposites in a lot of things. Some they're a little looser in some things, they're a little tighter in some things, and you just got to understand what vendor is in front of you and how you can give them the information they need, and then how you need to go about furthering doing an audit on your loan as well. So Richard, I'm going to go through a couple of loans every month just to make sure things are done. Like I have an assistant now, so I give them the task of like, okay, you need to make sure this insurance policy is always in file. If you can't find it, you need to find it or figure out if the seller had it. We're going through to making sure things are recorded, so that there's a checklist of things that I have to do, because if I don't, like you mentioned, with your land contract, that's something that maybe now that you've experienced it, you're looking forward on each loan that you go through now saying, okay, if this land contract is recorded, okay, now I'm going to stop. I'm going to say, am I going to record it? And then step two, am I going to not record it? Or am I going to convert this to like a note and mortgage or note and deed of trust? So that way you can alleviate the headaches you're going to have right now dealing with the attorney and getting things recorded.
So, by and large, are you finding that your servicers are notifying you if the borrower was late in their payments?
I'm not getting a good signal from you, Richard. I think what you said, let me repeat this, is that am I getting notification from my servicer if the payments to the insurance company are being paid?
Mm-hmm.
Okay. So yes and no. I believe the policy for the two main servicers that I'm using is to notify me, but I'm not really getting notifications. So it's more of a, I want to make sure it's all set up well and good. Luckily, the insurance policy, it expires once a year. So once you have the policy, you can kind of go and call the insurance agency, be like, hey, has this been paid if it's really close to the due date? Or, hey, do you typically get this payment on the due date? Or, sometimes they have tracking companies that can track the insurance due dates and stuff to see if they are being paid. And if not, there's a trigger that just automatically just goes ahead and gets one real quick. And then you have to make that payment for it. But then the borrower gets it put on their trust ledger, if you will, and then they are required to pay it back, whether it's in small increments of money or whether it's all at once.
So what I'm hearing you say is that notes are not totally set it and forget it, that there's a lot of ongoing follow-up that you have to make sure happens to protect your own interest.
I think when you buy a loan, you have to do quite a bit of research and work. I say quite a bit loosely, you're doing some work. And after you buy it is even more important to make sure that all the I's are dotted and the T's are crossed. And then after you get past that first 60 days, let's say, then it's usually just a checkup on it. It's maybe an audit every quarter or once a year or twice a year that you're just going, okay, are the taxes really being paid? And is the insurance policy really up to date and being paid? And is this, obviously I'm checking the payment history to make sure that things are being paid and nothing's going further than I want it to on some of these loans. So the answer is, yeah, it's not truly set it and forget it when you're the full accountability owner of this note, but it starts getting easier after a while.
Okay. All right. So what are the other things that you in particular, what are some of the biggest things that have gone wrong in your portfolio on an ongoing basis with loans? Not default or anything like that. I mean, day to day.
It's what I see is sometimes payments will get missed. Sometimes bankruptcies will happen. Like the two servicers I work with, they kind of are on their own and they let things go down the path they need to go down with some light instruction for me up front, and they get me involved when there's a decision that needs to happen that they shouldn't be making. But for the most part, I kind of have to look into my portfolio to see, like, okay, is there a missing payment going on? What's going on? Let me look at the servicing notes to see what the communication going on, and I'll have to find out maybe there's a bankruptcy going on, maybe there's a death to one of the borrowers. There's lots of situations that life happens, right? Lots of situations that happen to where, things are not moving at the pace that I want them to because of something holding up. Now, they usually get caught back up, at some point there in the near future, but there's usually a stopgate there. So I've seen just loans that we have right now, either it's a bankruptcy thing going on or it's a loan payoff situation, or I have got notices in the mail recently, which is why I brought up the insurance thing, about the insurance is being canceled, because if the servicing company isn't escrowing that insurance and taxes, then the responsibility is to the borrower to get that paid. So sometimes if they're a day or two late, the policy holder of the insurance company, the insurance carrier, is going to send me a letter in the mail that says, hey, this policy has been canceled. We're just letting you know. And the next day I'll get another letter that says, okay, this policy is in effect now, and it's all good. So.
Gotcha.
Yeah. Yeah. So I luckily haven't had any big catastrophes because I didn't do the proper things in the post-closing world, but I have caught myself a year or two later where I forgot to do a step. I forgot to look for this collateral. I forgot to record a document. So because I did that a couple of times, I really made sure that I knew as soon as I bought a loan, I'm making sure X, Y, and Z are done. And you brought up a great point earlier about having Podio and tasks and reminders, because we have a whole list of reminders that says, after we get this loan boarded, we need to make sure that we have a follow-up to be like, okay, are we receiving that payment? Whatever, 2 weeks out. And then we have another follow-up 4 weeks later that says, did this actually get recorded? If not, okay, now we can push on getting recorded. Because if the borrowers nowadays are finding more opportunities to sell their house and refinance, so you need to make sure that you are on county record shown as the true lien holder as of today, so that, the title company is going to the proper folks to get the payoff and stuff. So it's really important that you get these things done in a timely manner. Now, the other vendors that we use to rely on to record our documents and to store our documents, and servicers to collect from the borrowers, and insurance companies and stuff, like we have to rely on them. So I would say there's a slowdown perhaps from that. Mm-hmm. All in all, you if you yourself have 1 to 3 loans, it's very easy to manage by yourself. If you get more than 3 loans, you either need to get some help, or you need to have a good system in place to help you remember, okay, this is where we're at with this one. This is where we're at with that one. Because if you don't, with Richard, with you and I, we probably have a couple hundred loans between us, and things can get lost pretty quickly.
Yeah. As I'm sitting here listening to you say this, I'm thinking that I've got to get a better follow-up system for my notes, because I don't have one that's completely adequate. And that's a problem with a small shop, any small shop. I mean, how do you originate deals, find financing, and then keep all of this back office stuff going at once?
Yeah, it's a business, right, Richard? Right. You discover it starts to become a business. Now you have to dedicate a certain employee or a certain contractor to do some of that work for you, which is why you and I use vendors to help us with things. Then they have accountability, and then they manage that task of it. So those become expenses that you have to also understand. We're going to get derailed a little bit here, Richard. When we buy a note, we want to take into consideration all the costs involved with purchasing that note. And then after you purchase it, how to get it to set it and forget it mode, right? And so if you understand some of those costs lightly in your head, you can take your approach when you buy these loans, and you can take that into consideration. So now Richard and I look at a loan and be like, yep, we're going to board it with this servicer because it fits what they do. It's this type of loan. We know what that servicer fee is, so we're going to deduct that from the P&I, the principal and income monthly price. So then when we run our calculations, we know, okay, now we want to be at about this return. So we need to make sure that we're buying it at this price. Oh, wait, let's knock off a few $100 because we know we're going to spend some money with due diligence, so that then our net is going to be exactly what we want. And so our gross price is going to be, lower, but we know our net price when we actually fund it and put all the costs into place. That's where we wanted to be to begin with. And so we're right there in the black, as they say, for accounting. Mm-hmm. Mm-hmm. And new note investors don't take that into consideration because, quite honestly, they haven't run into this business for very long.
No, and I find, I know your clientele is slightly different than mine. You sell more whole notes to people who are actually getting experience in it and are willing to take care of those items themselves. a lot more of my clients are totally passive. They're buying partials and things like that. And even if they're buying whole notes, they totally want set it and forget it. So I find that I'm ending up doing some of that myself just to keep up the client relationship. That's a big difference in the two practices. So you want to, if you're starting your own practice, you want to think about that and what difference that's going to make to your practice. In other words, where do you want to go? Do you want to sell to more people who are actually getting in the business and taking care of those things, or have more passive investors?
Right. Yes, you kind of have to make the decision. I mentioned to you earlier about insurance policy, where we're fortunate enough to had a process to where we put ourselves on the policy and made sure everything was there. The borrower's house burnt down, then we were able to get paid off pretty quickly. So have you had a situation to where taxes were a problem and that you were unaware that the taxes were not being paid?
Yes, I've had that, but more often what I've had, especially due to the pandemic, is a lot of people, borrowers, kept their mortgage payments current, but let their taxes slide because they knew the county wouldn't come after them. And then even more so, they've let their sewer and water payments slide. And I've got one house in particular that's got almost $7,000 worth of back payments on their sewer that they haven't made for actually pre-pandemic about 3 years now. And I'm having to work that out with the borrower. And the problem with that is that the sewer bill doesn't show up on your due diligence. If you just happen to ask your title company to run that and try and get that information when you buy the note, then great, you might snag it if it's a problem at that time. But if it happens while you own the note, it's a sleeper. You have no idea that it's going on.
Yeah, that's a good point, because sometimes you'll see it in the county information with the delinquent taxes. You'll see an item there for, I forget what they call it. They have a code for it, but it's like city utilities or something. It could be, like you said, sewer, water, it could be gas, depending on how small the town is, if they pile it onto one. But you're right, it doesn't really show up, that stuff. So you have to, when you do a non-performing loan, obviously we're checking all that stuff.
Yeah.
We're expecting that to be there. With a performing loan that someone's paying their mortgage, you have a great point. But what if they aren't paying their taxes? What if they aren't paying the insurance? Like, their mortgage payment history could look fantastic, but what about the other stuff? It may not look so good. So you're right. You have to get to kind of check on that. So those are
right.
things.
And that depends on your servicer. As you know, one of the services we use will advance those out of their own account and then charge you interest accordingly. Another servicer that we use will not make any advancements on the taxes at all. So they'll turn around and call me and say, look, you've got to pay these taxes and we'll try and collect them later on, which can be pretty painful in a lot of instances.
Yeah, but that's part of the business, right?
That's part of the business.
We're dealing with higher yielding assets, loans, and we're not dealing with, $500,000 mortgages in places where interest rates, are 2%, 3%, 4%, and people pay on an ACH payment, like clockwork for years. I mean, obviously, if you want a perfect note, you're going to get, a very low return, but you're going to have extremely low risk. If you're looking for a little bit more return, there's going to be a little bit more risk and a little more accountability for you to follow up and check on these things. So
right. So to go back to the sewer bills just for a second, the way I found out about that one is that I did, for actually another reason, run the title on the property. And it turns out that the county had put a lien against the property for the sewer bill. And all of a sudden, this new lien popped up. And so I had to investigate it and take care of it.
Yeah. So do you run a title search after so long on a performing loan?
I typically do about 6 months out, something like that. I mean, it's fairly after all the recordation is supposed to be done and things like that. Because as you well know, the county doesn't necessarily take all of that into account. Plus, what you and I have both found is that in some instances, the assessor's office is not talking to maybe the township. Maybe the county assessor is not talking to the township. And so you're getting different reporting from different places about different amounts. And so that all needs to be straightened out.
Right. So there's a lot there going on, right? It seems daunting, but again, if you have a follow-up system, it makes it just a whole lot easier. So even if you're buying a lot of loans at a time, like we are, sometimes we're buying, a couple, sometimes we're buying, 8, 10, 12 loans at a time. You just got to have a way to track that stuff and understand, what you're doing. Most of my loans that I buy, I try to make sure that they're escrowed for taxes and insurance.
Exactly.
Not all the time they are, but it is nice to have the borrower kind of take that responsibility and deal with that. When they're not, you just got to have somebody follow up with it. So I'm lucky I have an assistant, and that's one of their tasks is just to make sure, like, okay, it's time for this to become due next month. Let's see if it's been paid yet, or let's see, what the holdup is. If taxes go delinquent, it's not a big deal. Yes, you're going to pay a fee, a penalty, but the penalties, it's not like they're severely steep by any means. They're just, you're just paying a little bit more than what you should be.
Right. So on that note, and collecting taxes and insurance, are you keeping the land contracts you have, or are you converting them to deeds and mortgages?
That's a great question. So eventually I would like to convert all of them to note and mortgage or note and deed of trust. But right now, if they're not a problem, they're not at the forefront of my mind for me to change them. But when the opportunity presents itself, I do take that and start converting them. The process, there is some money involved. Let's just be clear about that. Sometimes you can get the borrower to pay for it, some of it, and sometimes you can't. For the simplicity of just having the note and mortgage, it's much better than a land contract.
Mm-hmm.
But yeah, that's kind of where we're at.
Okay. So you're splitting that cost with the borrower, because I can see a lot of borrowers would push back and say, no, I don't want to do that.
If I can, I kind of position it as, hey, look, do you want to be on the deed? Great. I can do that for you. I can help clean this up, but I need some help here. I need you to pay for the title insurance, or I don't ask them to pay for all of it, because it could be a few $1,000 depending on what state you're in.
Right.
But I do ask them to bring something to it. So if they can bring $400 or $500, depending on if it's a really low valued loan, like a $30,000 note, I wouldn't expect them to have a bunch of money to pay for it. But if they got $300 or $400, I mean, that's great. And that it could be $1,000 cost, and that only cost me $600 to convert it. And I'm willing to do that and invest in that, knowing that I could have a note and mortgage and make things a little bit cleaner and a little bit nicer.
Right. Right. What's the other biggest item, if you can think of one, and there may not be just one specific one, on an ongoing basis that you need to take care of, that you find out, it's a after purchase item that is consistently a problem?
It's one of the things that haunts me every time I buy a loan, and that's the in-term payments. So the in-term payments, obviously, Richard, are like when we buy a loan, and before our servicer can service that loan, there is a time period of black hole, right? Of where that borrower is supposed to be making a payment. Well, they ain't making it to you. They're going to be making it to the previous servicer until that transfer date. That transfer date could be pushed out a couple of months. It could be pushed out a few weeks. It all depends on your servicer and their workflow and what they have in front of them. But you have to be mindful of, like, how many times did they make a payment? We got to talk to the old servicer, and you got to find that out. Then you got to get the payment from them. So there is money that I have left on the table for over a year because I didn't follow through in that in-term payment. Be like, I missed $600. I mean, how did I do that? Well, because I didn't understand that it's not the old servicer and the old seller's responsibility really to track that and push it to me, especially if they're a big operation.
Right.
But it's my responsibility to go after and get it. Now, they're required to give it to me, but they don't maliciously try to not give it to me. It's just that if they deal with thousands of loans, they're not going to catch it, right? I'm going to catch it because I don't have thousands of loans. We've got hundreds of loans. So it's much different for us. It's easier for us to manage that. So that's one of my biggest pet peeves for myself is, like, besides the insurance and everything else, is that in-term payment. I need that collection as soon as possible.
Right. And to your point, about your audits, I've found in several instances that notices such as sewer bills and things like that were being sent to past servicers.
Yep.
And the servicers would get it and just go, oh, okay, we're no longer servicing that loan. Bing, in the trash can. Well, hey, man, hey, you're, you just noticed you didn't know what was going on. So all the more reason for you to have an audit on things like that.
Yeah, that's a good point. So I'll just make a little sidebar real quick on that comment you made. The counties don't necessarily update all their databases quickly, even
Right.
if there's a transfer of ownership with the deed. That's one thing I've noticed is that people that I buy land contracts from, even a year or two later, sometimes the county doesn't update that information. So sometimes it's a phone call that you have to make and be like, hey, look, I bought this loan. Here's my allonge and my assignment and the transfer deed. Like, please put my address on there and send it to me. So I'll have my assistant go through and look up that stuff and make those phone calls. But again, it's you're not expecting that to happen. It's unfortunately when it happens is when you update it. So even we have holes in our process a little bit, but those are just the stragglers or the standard deviations that we don't really worry about too much. But yeah, that's something that you have to check on as well. So there's quite a bit of things to follow up on.
Especially if you have a land contract, because not all land contracts are recorded.
Correct. Yeah, and even if they are recorded, it's still, you need to follow up and make sure the county, because some
Right.
counties are larger than others, and some counties are extremely behind on technology, and it's interesting when you have to go through the county as which county you're dealing with, right?
Yeah, to that point, I bought a note last year that I was just amazed. In Ohio and in this county, you have to paper file and record. It has to be hand walked in. So there's no way you can do any sort of electronic recording. So they have this whole system of recorders, people who are local, and you send your documents to them, and they charge you $100 or whatever. And for the most part, it's a lot of housewives, and they will take it over and they'll actually put it in the bin at the desk, at the counter, and get it stamped and return that back to you. And then they largely have a paper system beyond that. And it just astounds me that there's counties that are still doing it that way. But
yeah, that's an 80-year-old system that's still in effect today for that county.
Yeah.
That's funny.
So all the more reason to have to follow up on this stuff.
Right on. Richard, that was some good conversation there about the post-closing stuff. This episode number 12 was brought to you by BrightPath Notes. Stay tuned. We're going to have a little bit of fun after this. All right, Richard, thanks for being on our podcast again for episode number 12.
It's great.
And appreciate that. Appreciate the conversation that we have about this. And actually, talking about the post-closing stuff, it brought up a lot of things that I realized I need to check up on a couple of loans that you and I have bought lately. So
Right.
Good conversation to have today.
Yeah, I think actually I'm going to ask you for the contact info for your VA and start getting her to go through mine, because if they know the process, why not just hire them to do it to me too? Why create a whole new wheel with somebody else?
So I want to talk about, because you brought that up and you did that so eloquently, you didn't know that you were teeing me up for this.
That's called a good segue.
It's called lobbing it up and knocking it out of the park. Good segue.
Right.
So it's not how you do it, it's who does it for you. And I think running this business, note business, at some point, if you want to make this scalable, you kind of have to figure that out. And so, Richard, I've been working really hard to try to find people to do certain tasks that I need to have done. Let's just call them back office, administrative, or operational type of tasks, to where now I've kind of grown into a team that does certain things for the business. So what is the first thing that you decided to kind of push off to the side to have somebody else kind of own that responsibility and do? What's the first one that you had done?
The first thing I had done was post-closing.
Okay.
So, in the realtor's world, they would call that a transaction coordinator. And somebody who just collects all those documents, gets all that stuff done for me. So once I've done the deal, I can sort of forget that needs to be done and cross all those T's and dot all those I's. I've got a group that I send all my recording documents to. Some recorders will do that some servicers will do that for you. But personally, I don't know how you feel about this. Personally, I have come to, unfortunately, not trust those servicers because they may not charge you for it. They may just do it as a courtesy, but it's a second, if not third tier item that they get done. And as you said earlier, it may not get done for 6 or 8 months.
Yeah. And it's not their core competency, right? It's not really what they're designed to do. Yes, they can do it. Yes, they know how to do it. But if it's not in their wheelhouse, what's the point in having them do that? So my question to you is, why did you choose post-closing as your first starting point of moving that operation off of your desk and your responsibility?
It was the biggest item of pain earliest. So before you and I started working together, I was trying to close 3, if not 4, notes a month. And what you quite quickly realize, you can get through 1 month and get the follow-up done. You get into month 2 and you get so bogged down, even with a good list on the back side, that it becomes very, very difficult. And I had one small portfolio of about 6 loans that I bought from a seller. And it was interesting because he was an experienced investor. And I have to say that he was so incompetent, and his self-directed IRA company was so incompetent that it took me probably 4 months to get all the documentation done for just those 5 loans.
Wow.
Yeah, it was just, if I didn't have gray hair before, I certainly had it afterwards. And you can't, the time that you have to spend on it is just too expensive.
Yeah. Right, because you can't do anything else but fix those and put those in the right order and get things moving to where you don't have to worry about it anymore. So
yeah, and I have to say too that level of detail at that point is not my core competency. That's one of the reasons that you and I make such a good team, is that you are much more detail oriented on the back end and much better at doing that than I am. I'm the first person to admit that.
Great.
Yeah,
it's recorded and it's on camera. We got it.
You got it. You're very good at that, and I appreciate it.
Thank you very much. I appreciate that, and I appreciate you, Richard. Thanks for sharing a little bit about that. That was our little sidebar, a little fun today, just to kind of get a peek into what it's like to run a note business. And I'm Justin Bogard with BrightPath Notes. This is episode number 12. Thanks again, Mr. Richard Thornton. And Richard, I'm sure we'll probably see you in an episode or 2 in the future.
I hope so.
All right, my friend. I will talk to you later. And for you guys, we'll see you on episode number 13.
All righty.
Thanks for listening to Be the Bank. We hope you learned something from today's show. If you enjoyed this episode, please rate and review us. Plus, check out our BrightPath Notes channel on YouTube and follow us on Facebook and Twitter at Be the Bank and on Instagram at Be the Bank Podcast. Be the Bank is sponsored by BrightPath Notes. Thanks again for listening.